Good afternoon, ladies and gentlemen. This is your ticker guy coming at you from wonderful Niceville, Florida. Today I would like to present to you a 4-point plan to end the credit crisis, end the housing crisis, rebase our economy to a stable, sustainable level, and prevent speculative asset bubbles from forming in the future. Let's start with housing. Housing is where this crisis began and is where it must end. My plan would offer a 30-year fixed 4.5% interest rate refinance option to all existing homeowners on their primary residence backed by Ginnie Mae. The government would allow a 50 basis point profit for the bank that issues the loan, and it would eat the difference between that rate offered to the consumer, the profit margin, and the eventual sale of the debt into the securities market guaranteed by the full faith and credit of the federal government. These loans would be fully qualified as to income and assets, that is fully documented, and would require no more than a 36% DTI, that is debt to income. FICO scores would be ignored for the purpose of doing this because many of these homeowners are in fact underwater, and more so, many of them have stopped paying their mortgages as they are simply unable to make the payments at the current price. The principal value would be reduced to the lesser of either the loan balance or the appraised value of the house. This program would run for 6 months and be open again to all primary residence owners, whether you have a mortgage or not. At the end of the 6 months, this door would slam closed, and we would impose upon the banks a requirement that at 90 days delinquent, all mortgages must be foreclosed, and within 90 days after foreclosures, all properties must be sold either privately or through public auction. This would clear the housing market of excess inventory and establish a base price for housing across America within the next 1 year. That in turn would drive prices down to the point where average Americans would be able to buy a home again without using exotic, dangerous, or subsidized loans and prices. We would again see a return to homeowners being able to purchase homes using 20% down, 36% DTI, and a 30-year fixed mortgage. That is the point at which new home buyers and those who are currently renting would come into the market. Those who wish to keep their homes would be able to do so. However, there would be those people who wish to treat their home as a place to hang their hat, a roof over their head, and a place to sleep, as opposed to a speculative investment. Point number 2. We must cap at the federal level the interest rate allowed for all consumer loan products at Fed funds rate plus 10%. The banks claim they need to be able to price for risk. I retort that any bank that cannot make a dandy profit at a 10% margin over their cost of funds is by definition engaged in predatory lending and doesn't care whether or not you're capable of repayment. That is a major problem because granting loans to people who are unable to pay is how we get speculative asset bubbles, and the only way we can stop them is to prohibit that behavior. Those institutions that wish to argue otherwise have a burden of proof to show, because the fact of the matter is that giving somebody a loan that they're likely to be unable to repay is neither helping them nor helping you. Third, we must repeal the Bankruptcy Reform Act. The Bankruptcy Reform Act ostensibly was supposed to force consumers to be more responsible. What it has really done is allowed banks to be irresponsible. It is time to stop that. The threat of a Chapter 7 bankruptcy to a lender is a very real threat and one that needs to be honored and one that needs to be available. Only through the threat of Chapter 7 by the consumer is a bank forced to underwrite the paper that it actually issues. Because if it doesn't, and you declare Chapter 7, they will take a loss. It is only just that if the borrower takes a loss in the form of a bankruptcy, that the lender be forced to take a loss in the form of eating the loan that was unable to be repaid. Again, it is about market transparency, it is about market risk, and it is about responsibility on both sides of the table for the transactions that are undertaken. This law is a travesty and it must be repealed immediately. Finally, we must put back in force Glass-Steagall, specifically the prohibition against depository and lending banks being able to engage in any sort of trading or securities transaction. These institutions that want to go and take deposits and make loans have inherently a systemic risk component to them, as they have a federal backstop. Again, for those institutions that cannot make money at a 10% margin between the cost of funds and the interest rate charged, need to re-examine their business practices. If you are making prudent loans, that is literally a license to print money in almost unlimited quantities. The reason we are in this mess is because trading firms have been able to go out using the federal backstop, make loans without care about credit quality, then use the securities markets to turn those loans into immediate cash by bamboozling the purchasers. And when those bets go bad, come back to the federal government and bleat about systemic risk, thereby obtaining a bailout. It is outrageous, for example, that Goldman Sachs was able to purchase tens of billions of dollars of credit default swaps from AIG without paying attention to the fact that AIG was unable to pay those swaps off in the event that there was a credit event. This then led them to go to the government and bleat about systemic risk and gain over $13 billion worth of pass-through payments of your tax money in order to bail out their bad bets. I have no problem with Goldman Sachs legitimately making trading profits, but they must not be allowed to shed off the costs of their bad wagers while they continue to keep all of the money that they make from their good ones. That is how we get speculative asset bubbles, ladies and gentlemen, when people are able to make bets that they never have to cover when it turns out that they're bad. The only way that we have market discipline is when it works both ways. That is, you make money when you make good decisions and you lose money when you make bad ones, including the possibility of going bankrupt. If we make these changes, most of the large banks in this country will be forced out of business. Many people will say that is an unacceptable price. That is a lie. The truth of the matter is that there are thousands of banks across this country who did not make bad loans and who did not act imprudently over the last 10 years. They will pick up this business. They will hire people. They will bring that business and that income back into our local communities and into our states where it belongs and take it off of Wall Street. The process of credit intermediation and risk assignment will continue to be performed by those trading firms, but they will not have federal backstops and they will not have the ability to claim systemic risk. It is time that we rebase our economy to that which can be sustained by actual productive output. We have already seen in first quarter earnings results, and in fact in earnings results over the last year, that this is approximately 30% less than where it was at the peak in 2005, 2006, and 2007. That level sounds horrifically bad, but to put it in perspective, ladies and gentlemen, it is only taking us back in GDP to where we were in 2000. That is not a horrible adjustment, even though it sounds like one. Yes, it will cause people to lose their jobs temporarily, but the person who gets laid off today on Wall Street will be able to find a job tomorrow on Main Street for a bank making prudent loans. We must do this today, ladies and gentlemen, because China, over the last 2 weeks, has had 3 failed local debt auctions. We are coming to the end of our rope with the ability to shift risk onto the taxpayer and generate $2 trillion a year deficits. We cannot afford to have foreign interest and foreign appetite for our securities disappear, and yet that risk is very real and has never been higher than it is today. We must instead support Main Street, and we must rebase our economy to a sustainable level. The 4-point plan I've put forward will do so. I welcome the opportunity to debate this with anyone at any time in any of the national media, anywhere someone would like. I'm the Ticker Guy, and that's my opinion.